Joining us now is McAndrew Rudisill, President of Emerald Oil. Nice to have you here.
Thank you for having me.
Now, the Bakken Shale has revolutionized how the U.S. thinks about its future energy policy. As an operator in the basin, give us some perspective on the magnitude of the opportunity in this play.
Okay. Well, the Bakken's approximately 8 million acres total. There's 700,000 barrels a day of oil production coming from the basin today, and we estimate that there's going to be 1.5 million barrels of oil coming from the Bakken by 2015 to 2016. The total amount of offtake infrastructure has continued to grow at a really rapid rate in the Williston Basin over the last couple of years, and we think that that total offtake capacity will start to exceed production around 2015 or 2016. There's currently 700 rigs running in the, jump back to this. There's currently 200 rigs running in the basin. We think there's 4 Middle Bakken wells that can be drilled per drilling spacing unit, and an additional 3 Middle Bakken or 3 Three Forks wells that can be drilled in each of these drilling spacing units. And if you believe in the lower Three Forks play, there's probably another 3 or 4 lower Three Forks wells that can be drilled in each of the drilling spacing units. So we think the aerial extent of the play is going to continue to grow as the technology progresses. We've seen that occur over the last 4 years, and we're really excited about the total estimated recovery of the entire basin. It's 24 billion barrels of oil, and we think with the Three Forks added, it's 30 billion in total. So it's a large oil basin in the U.S.
Well, now, in July of 2012, your company made a significant strategic change from a non-operated business model to an operated focus. What were you seeing in the market that led you to make this change?
We saw an opportunity when we executed the merger with Voyager Oil and Gas. They had a large non-operated portfolio focused on the Williston Basin, and as a non-operator, they did not have as clear of a picture on their capital expenditure budget going forward. So when we made the shift to operator, we number one analyzed their total non-operated portfolio, decided that we could transition some of that non-operated acreage into operated acreage. We did a lot of data analysis on that and have built our own proprietary data analysis system to use the non-operated AFEs in addition to the available NDIC and HPDI data to look at all the activity in the basin. And with that, we've executed on creating an operated portfolio for Emerald Oil, number one, but then two, really control our destiny with an operated drilling program. So we're going to be spending $100 million over the next, in our 15-month capital program to drill 7.5 net operated wells and then 1.9 net non-operated wells. So Emerald's capital expenditure is going to basically fully transition to an operated budget, and with that, it's going to allow our production to increase to about 2,600 barrels a day exit rate for the end of this year.
And with a new focus on an operated business model, talk to us about the team that you've put together.
Sure. So CEO Mike Cruz has approximately 20 plus years of experience in oil and gas. He was with Woodside Petroleum in a variety of different roles in Western Australia, handling offshore development programs from them. And prior to that was with Shell, focused on the North Sea. David Veltri, our COO, was most recently with Baytex Operating. He was the COO there. He's drilled hundreds of wells in the Bakken. Prior to that was with EOG in El Paso. And then Carl Osterberg was most recently with Delta Petroleum. He's drilled horizontal wells in almost all the resource basins in the U.S. and has got decades of experience drilling oil and gas wells. And below them we have a large technical team that's going to help on our operated development program. J.R. Rieger runs our land department out of Billings, Montana, and the land leasing effort's very important in the Williston because we're focusing on continuing to acquire more operated leasehold.
Earlier this month, you took another step in transitioning to the operating model with a $50 million investment from White Deer Energy. How should investors look at this transaction?
The White Deer event was, I think, a seminal event for us because the capital allowed us to increase our working interest in our McKinsey leasehold, which in turn allows us to increase our production. A very experienced oil and gas executive was brought onto the board. He's one of the principals of White Deer, Tom Edelman. He's founded and sold a couple of different E&P companies, and we're excited to be partnered with White Deer because it's a really experienced, great group of people.
What else should we know about your company?
Number one, we're focused on the Williston Basin, and we're going to continue to be focused on it. It's going to be a very simple production growth story in the Williston. We've executed on everything that we said that we would do since we recapitalized the company in September. We're now properly capitalized to execute on our entire operated program. And we're on our third well right now, ahead of schedule on drilling. And we feel very comfortable with the production estimates as they stand, and we're focused on continuing to build the company through these leasehold acquisitions in the Williston.
Well, all the best of luck to you for the remaining of the year.
Thank you very much.
McAndrew Rudisill, President of Emerald Oil.